You've probably heard the term whispered in financial circles, the everything crash. And while for most people that sounds like the end of the world, for a prepared few, it might just be the last great buying opportunity of our generation. A theory suggests a violent scramble for US dollars could be on the horizon, one that might drag every market down with it, creating a brief but massive dip in Bitcoin. This wouldn't be the end, it would be the final boarding call. In this video, I'm going to lay out the case for this scenario, show you how to prepare for the drop, and explain why the response to such a crash could unleash a tidal wave of money that makes every past bull run look like a test.
Let's be honest. You can feel it in the air, can't you?
Markets feel fragile. Headlines are getting more anxious. That feeling in your gut that something is about to break might not be wrong. But to understand what could happen, you have to look past the obvious culprits like stocks or housing. The real story, the one that could matter most, is all about the US dollar. The entire global financial system is built on a mountain of dollar-denominated debt. Countries and corporations all over the world owe money in a currency they can't print. This creates a fragile situation, kind of like a global game of musical chairs. As long as dollars are flowing easily, everyone can keep dancing. But when a crisis hits and the music stops, everyone desperately scrambles for a chair, in this case, a dollar. This isn't just a theory. We saw a version of this play out. In March 2020, as the pandemic triggered a global panic, investors sold everything to get one thing: cash, specifically US dollars. In that chaos, stocks, bonds, and yes, even Bitcoin, all plummeted in dollar terms. Bitcoin fell by roughly 50% over a brutal 24 to 48 hour period. Even gold took an initial hit before recovering and eventually soaring. Why? Because in a true liquidity crisis, having the dollars to pay your debts or meet a margin call is all that matters. When big players are forced to sell, they don't sell what they want to sell. They sell what they can sell. And Bitcoin, with its highly liquid 24/7 market, becomes an ATM. This dash for cash is a powerful force. Today, with global debt levels in many respects higher than before the 2008 financial crisis, the system is incredibly leveraged. While indicators like the SOFR lending rate have risen largely in step with Fed policy, any unexpected spikes can still point to tightness in the financial system's plumbing, getting analysts' attention. The ingredients for another, perhaps more intense, scramble for dollars are arguably in place. If the last crisis was a tremor, the next one could be a real earthquake. So what could pull the trigger? It's impossible to know for sure, but we can game out a few plausible scenarios. One could be a geopolitical shock. Imagine a major nation or bloc of countries making a political statement by rapidly reducing their holdings of US treasuries. While central banks and other buyers might absorb some of the selling, a sudden, large-scale move could still shock the system and drive up borrowing costs. Another trigger could be a wave of corporate defaults. As economic conditions tighten, heavily indebted companies could start to fail, forcing their leveraged lenders to liquidate assets indiscriminately to get cash. It's a domino effect waiting to happen. And then there's a crypto-native black swan. The collapse of a major stablecoin could trigger a mass panic as billions in crypto are sold in a flight to actual fiat dollars. Similarly, the failure of a major exchange could lock up funds and send a shockwave of fear through the market. When one of these triggers is pulled, the crypto market's leverage can turn a bad situation into a nightmare. In a panic, this leverage unwinds violently. Margin calls force automated selling, which pushes prices down, triggering more margin calls. It's a vicious cycle. In these moments, liquidity evaporates. The difference between the buy and sell price on exchanges can widen dramatically. This is the point of maximum pain, where the average investor capitulates and sells at the worst possible time. It's also where the saying, "not your keys, not your crypto," becomes a law of survival. While major solvent exchanges have historically maintained withdrawals during volatility, the risk of halts, or worse, insolvency, as we saw with platforms like Celsius and FTX, is very real. This chaos is designed to shake you out. But if you understand what's happening, it's not a threat, it's a signal. Look, preparing for this isn't just about theory, it's about having the right tools. If you don't have a hardware wallet to secure your Bitcoin in self custody, now is the time. Getting your assets off an exchange is the single most critical step in this playbook. I've left links below to the ones I personally use. Don't wait until it's too late. But here's where the story pivots. That moment of maximum fear, when it feels like everything, including Bitcoin, is going to zero, is precisely the moment of maximum opportunity. This isn't just random chaos. It's a predictable liquidity event. And these events tend to have a predictable conclusion. Think about it. Whenever a dollar liquidity crisis has threatened the global financial system, the Federal Reserve has stepped in. While their playbook has many pages, including rate cuts, forward guidance, and even tightening, their go-to move in a systemic freeze has been to act as the lender of last resort and open the floodgates. We saw it in 2008 with quantitative easing, and again in March 2020 with massive liquidity injections. The alternative, letting the entire financial system collapse, is just not an option for policymakers. So the violent scramble for dollars that could cause the crash is the very thing that makes the policy response, printing more money, almost inevitable. The crash is the entry signal. The money printing that follows is the rocket fuel. That brief, terrifying window is your potential chance to acquire Bitcoin at a steep discount, right before central banks are pressured to devalue their own currencies. Understanding this is one thing. Acting on it is another. So here is a simple 3-step playbook to position yourself for this potential crisis. Step 1. Build your war chest. You can't seize an opportunity without ammunition. Your ammo is dry powder, cash on the sidelines, ready to deploy. This means setting aside capital now, before a crisis hits. Your goal is to be a buyer when everyone else is a forced seller. This should primarily be cash in a secure bank account. You can also consider highly reputable, audited stablecoins, but be extremely cautious. Stablecoins carry their own risks, including the risk of depegging in a panic. Do your research and diversify. Step 2. Know your targets. A crash is chaotic and fast. You need a plan before the panic. Decide now at what price levels you'll start buying Bitcoin. Instead of trying to time the absolute bottom, which is impossible, consider using staggered buy orders. For example, deploying 25% of your war chest at a certain price, another 25% if it drops further, and so on. This takes emotion out of the equation. In a crisis, you want to stick to the highest quality, most liquid assets. In crypto, that means Bitcoin and perhaps Ethereum. They have the deepest markets and have historically recovered the strongest. The altcoin market will likely face a brutal reckoning, and many smaller projects may not survive a severe crash. This is a time to focus on quality, not speculation. Step 3. Master your psychology. This is the hardest step, but it's the most important. All the prep in the world is useless if you panic. When Bitcoin is down 50% or more, and every headline is screaming, "It's over," you must have the conviction to execute your plan. Remember the dynamic. You are not just catching a falling knife. You are acting on a thesis that central banks will be forced to respond. You are providing the liquidity that panic sellers desperately need, and in exchange, you are acquiring a scarce asset at a fire sale price. They are acting on fear. You are acting on a plan. After the crash comes the potential response. And that response could be a flood of liquidity. The hole created by decades of debt might require an unprecedented amount of new money to fill. This is the thesis for Bitcoin's next chapter. An act of mass currency creation could drive investors, institutions, and maybe one day even sovereign funds to search for a store of value that can't be arbitrarily inflated. They'll be looking for an asset with absolute scarcity, outside the traditional system that just proved how fragile it can be. This is where Bitcoin, with its hard cap of 21 million coins, becomes a logical destination for that capital. The combination of a post-crash accumulation phase, a supply shock from the Bitcoin halving, and a potential expansion of the money supply could set the stage for a bull run unlike anything we've ever seen. This is why some are calling this potential downturn a generational opportunity. So let's bring it all together. An impending market crash, this everything crash, may not be the end. It can be viewed as a feature, not a bug, of our debt-based financial system. A predictable liquidity event driven by a violent scramble for dollars. This event could create a brief but massive opportunity to acquire Bitcoin at a deep discount. That moment of maximum financial terror could be your moment of maximum opportunity. It's a filter designed to shake out the unprepared and potentially transfer wealth to those who have a plan. History doesn't repeat, but it often rhymes. The choice is yours. Will you be a victim of the storm, or will you use it to sail to your destination? The window to prepare is now. If this playbook was valuable, hit that subscribe button and turn on notifications so you don't miss future updates. And let me know in the comments, what's your #1 step for preparing? Let's get this conversation started.